2025 has started off a bit rocky with a new administration coming into office, the announcement of tariffs and trade wars brewing, inflation still shaky, and overall just a lot of uncertainty in the market. Right now there are some super solid deals in the stock market, and I'm buying up 5 stocks like crazy this year in 2025. On this list is a totally new stock that I just started adding to my portfolio as of this year. I already announced it in my Patreon group, so if you ever want to get in on the inside scoop and hear about things before I throw them up here on YouTube, go ahead and check out the link down in my description and come join the group. For this video, I'm going to give you my picks in order of least risky all the way to the most risky. Higher risk should mean higher reward, but when putting together your portfolio, make sure you understand which ones are the higher risk. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So first on my list is actually my largest holding as far as individual stocks goes, and it's one that I've been buying up like crazy even before this year, but very much specifically because of this year. Most stocks are way down, but this one's holding steady and even growing because Warren Buffett is the king, and this one is Berkshire Hathaway. Berkshire Hathaway is a massive holding company that's been run by famed value investor Warren Buffett since the 1960s. It owns a variety of well-known private businesses and has significant minority interests in public companies such as Apple. Berkshire has a massive amount of cash on hand and is waiting patiently to deploy that cash at a time that Buffett believes he can find value in certain businesses. Over the past 12 months, Berkshire Hathaway has outperformed the S&P 500 by 9.45%, and over the past 20 years, Berkshire has outperformed the S&P 500 by 352%. The current price of brk.b is right around $493. It has a strong buy analysis on investing.com, and it has a market cap of over $1 trillion, and has a very favorable PE ratio of just 10. One big question that I get is, yeah, but what happens if Warren Buffett passes away, which he is in his mid-90s, what's going to happen to the company? And I believe that he is an even better leader and businessman than he is an investor, and he's been teaching the people that are going to be taking over for him how to do this and has been guiding them through for the past decade. So I think it's going to be just fine, and I think we're in great shape with this company. And right now I'm actually very interested. What are a couple stocks that you're buying in 2025 and that you've been investing in heavily? Go ahead and write that down in the description down below. This next stock is my top AI pick. Investing in AI has proven to be profitable, with companies like Nvidia, Apple, Microsoft, and many more showing substantial growth. So definitely investing in AI stocks is a great move for your future, but what about investing in your career? Take the first step now for free with today's video sponsor, Growth School. Growth School is offering 3-hour hands-on AI training where they teach you how to use over 25 plus AI tools. Register now in the link down in the description. Trust me, this training is a game changer for those who want to grow in their career. Here's the best part. This is normally a paid training, but it's exclusively free for the first 1,000 Investing Simplified viewers who join using the link below. Yes, for free and only for Investing Simplified viewers. People who register will also receive a free $500 bonus worth of extra resources. It covers everything from job hunting strategies and salary negotiation techniques to mastering Excel and creating content. This AI training isn't just for tech folks. Whether you're in finance, sales, marketing, HR, a student, or an entrepreneur, this training is definitely for you. Growth School's helped over 1 million people upskill across the globe, and this is your chance to join that top 1% in an AI-first world. So click the link in the description, snag your free spot, and this is your only chance to learn those skills that'll secure your future. Don't forget to join Growth School's WhatsApp group for regular important updates. Now, like I was saying, next on this list is one of my favorites in the world of AI, but it doesn't just encompass products and services within just AI alone. It's also the second safest or least risky company on this list. Microsoft stands at the forefront of the rise in artificial intelligence as a transformative force in the global economy. The tech giant was a pioneer in the field and an early investor in OpenAI, the group behind the chatbot ChatGPT. That partnership paid off big, allowing Microsoft to quickly integrate AI tools across its product and services ecosystem and capitalize on strong demand for AI solutions as a major growth driver. One huge thing in the works for Microsoft that many people don't even know about is that it's debuting a new chip to handle quantum-level processing tasks. The Majorana 1 will assist quantum-level computers to become capable of solving meaningful industrial-scale problems in years, not decades. According to Wall Street analysts, Microsoft is forecast to achieve a revenue increase of 13.1% for 2025, followed by a 14% pace in 2026. The earning per share estimates are also robust, expected to reach a record $13.16 this year, up 11.5% from 2024. The bullish case for the stock is that the company can ultimately outperform these targets, particularly in a resilient economic environment. On investing.com, it shows that Microsoft is currently trading right around $396. Its market cap is right under $3 trillion. The PE ratio is only about 32, which is low for a company like this, and its fair value as assessed on investing.com is at $401.23. So right now means the stock is undervalued and on sale. Next on this list is one that's been on major sale. It's one that's actually been one that I've been buying since last year, and I've been continuing to buy like crazy this year. This one's called Alphabet, or Google, and like I said before, it's on major sale. It's currently trading at a little over $173, but that's down over 10% in just the last month. The PE ratio is ridiculous at just 22. That's the PE ratio of a value type company, not a tech giant with a market cap over $2 trillion. The main reason I'm into Google is their absolute dominance, and they are the #1 leader in a vital category. Google has 75% of the internet search market and 85% of the mobile search market. Additionally, search on the internet continues to grow as it becomes a more integral part of people's daily lives on a global basis. A massive profit driver for the company, this is the main ingredient in making Google a safe investment. Right now, Google's down because of the lawsuit and because people think that ChatGPT is just going to come in and just take everything away from this search engine just because they have this new AI-powered machine. Regulatory concerns have been weighing down Alphabet stock, with the Justice Department planning to break up Alphabet and force the company to divest the Chrome browser and Android operating system. Reportedly, Google met with Trump administration officials to push back against its proposed breakup. According to Google, the proposals made by the Justice Department would be detrimental to the US economy as well as national security. I'm not too worried about this. Eventually, they're going to have to pay a fine, or they're going to have to divest in a couple pieces of the company, but the rest of the company is going to be humming like crazy, and we're just going to see that cash flow continue to pile in. Also, Google's raised its game in AI, so I'm not worried about ChatGPT taking this over. They will compete, and they have the money to do so. For example, Google also unveiled new AI shopping features earlier this week, including Vision Match, which was previously run as an experiment in labs. According to Google, the feature lets you describe any garment you have in mind and then uses AI image generation to show you a few ideas of what it could look like in similar shoppable products. I think the sky is the limit for Alphabet, which owns Google and YouTube and a bunch of other huge companies. These are continuing to grow and outperform, and right now it being on sale, I can't say enough about this one, and I'm definitely buying it while it's down, while everybody's scared and everybody's retreating. This is the time to be investing in a company like this. The next stock that I'm buying right now non-stop is definitely one that's much more risky than any of the three that I just went over. This next company has significant contracts with the government for about half of its business, and then the other half of the business, it works with businesses and large corporations and even mid-sized corporations, and provides a product and service that literally everybody needs. This company is none other than Palantir. The reality is that the AI investment cycle is just getting started. In the past quarter alone, companies announced more than $325 billion in AI investments, and that's just for 2025. Apple announced more than $500 billion in planned AI spending over the next 4 years. Granted, much of this planned spending will go to chip makers like NVIDIA, who produce the powerful GPUs that power AI applications. Nevertheless, a significant portion of AI spending will go towards software platforms like Palantir's AIP. Moreover, the true inflection point for AI software could arrive when small and medium-sized businesses and organizations come on board. In particular, Palantir's platform could drive massive efficiencies across a range of industries traditionally dominated by small businesses such as construction, real estate, and retail. All of this sounds amazing, but then there is a little bit of bad news. The valuation on this company is definitely crazy. This is a very expensive stock, which makes it very risky. On investing.com, it shows that it's trading at around $81 today, which is almost 10% down for the day alone, so big sale today. The company health is solid, but the valuation is way off, so the technical analysis and fair value both say overvalued. This is due to some of these numbers, like PE ratio of about 400, price to book over 38, and then a fair value stock price of about half of what it's trading at, so $46.50. To me, this is a stock that can go to 500 or drop down to 40. I believe that it's going to be the former, I believe it's going up, and I believe that there's definitely a need for this product, and this company is a very solid company in general. Now, this last company stock is one that I just started buying up in 2025, and it's one that's had a bit of a drop since the beginning of the year, and I've been waiting for these prices to come down because I've liked the company for so long, and so many people, YouTubers, bloggers, analysts have spoken so highly about this company, but I just didn't like where the value was. And right now, with it being so low, I'm taking a bite. Investing in this company would be like investing in Apple in 1976 when they made the first Apple computer, the Apple I, or maybe even a bit later, like in 1984, when they made the Macintosh computer. Who knew that 40 years later, the world would be run by all their sticky products? It had to start somewhere, and had you invested back then when they were just getting started, you'd be rich today. This company isn't just getting started today, but it is just at the tip of what it has as far as potential for this type of company, and this company is called SoFi. They're in the financial services sector, and traditionally they've been looked at as a bank, but there's so much more. They also do student loans, private loans, credit card consolidation, home loans, refinances. They're also a full-on investment firm and an insurance company and a business bank and loan specialist. They target millennials and younger with their super efficient and tech-savvy platform and low fees to gain all these new customers at this age and then hold them forever to take their money on the platform for literally any loan they'll ever need throughout their life and then all their investing needs and anything else. This is such a genius business building and all-around long-term mindset for epic growth. To call SoFi's growth story an impressive one doesn't really do the company justice. Since going public in 2021, SoFi's membership base has increased from 3.4 million to more than 10 million, and it's evolved from a relatively small lender into a full-featured online bank. But even with the impressive growth, SoFi is still a relatively small financial institution. Just for context, SoFi has roughly 1% of the deposit base of Bank of America. To me, that gets me even more excited. This shows that they're just at the beginning of what they could possibly do, and that makes me excited as an investor to get in at the beginning. And that's just in the banking sector. They're also doing all these extra things that I just showed you, especially that investing platform and having retirement accounts and all of that stuff. SoFi is definitely on sale right now, just like a bunch of other stocks due to the uncertainty and shakiness in the stock market right now. For the year to date, it's down over 11% and currently trades at $12.51. If this company ends up doing a quarter of what I believe that it could actually do, the people that are investing in this at this point are going to be very, very happy in a couple of years. Watch either of these two next videos to keep you going strong in your investing journey, and remember to keep investing simplified.